Elsewhere, the Federal Reserve today released the minutes of its last meeting, where policymakers lowered interest rates by a quarter point. And during that meeting, many saw little need for further cuts. Here's Steve Liesman.
After Fed officials cut rates in October, minutes from their meeting then show they expected to stop cutting and remain on hold for some period of time. The minutes show officials thought after a 25 basis point cut, which was the third of the year, rates were seen as, quote, well calibrated to deliver moderate U.S. growth and a continued strong labor market. Most said the overnight funds rate controlled by the Fed in the new range of 1.5% to 1.75% was, quote, likely to remain appropriate unless the economy performed materially differently from what the Fed expected. At the time of the meeting, Fed officials saw a lower chance of recession. They also said the risk to the economy from the trade war, Brexit, and other global developments had declined. The U.S. economy was called resilient, and two Fed officials didn't want to cut at all. Still, the Fed cut because of concerns that manufacturing and export weakness sparked by the trade war and weak global economies could end up dragging down the labor market and the consumer. Officials outright called it an insurance cut. Now, after 3 rate cuts, Fed officials were clear in the minutes and in speeches since the October meeting. Rates have stopped going down, at least through the end of this year, and likely into a good chunk of 2020. For Nightly Business Report, I'm Steve Liesman in Washington.